Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, welcome to Zacks' top stock picks of the week. It's me, Dave Bartosiak. I've got a pick for you, but then we've got the head honcho, Shiraz Mian, coming with his pick later on in the show. So first, let me brag about Acuity Brands. That's ticker AYI, a Zacks rank number 2 buy. Let's take a look at Zacks.com and see what it is I'm seeing with Acuity. In addition to that Zacks rank number 2 buy, let's take a look at these style scores. A B for value, B for growth, C for momentum, helping it round out with that VGM composite score of A. So that means it's a strong Zacks rank number 2. Like to see that. The building products and lighting industry, probably not the sexiest of industries, but it is in the top 29% of our Zacks industry rank. Now, these guys are set to report earnings before the bell. This is on January 7th. So today's Tuesday the 5th. That would be Thursday the 7th. There's a positive earnings ESP heading into that number. So there's a decent chance of a beat. Last quarter's beat came in at 19.9% better than expected. So that's some good stuff there. Previous quarter for Acuity. Let's take a look at the detailed estimates here. A couple things I want to look at. First, the sales. So you're going to see this a lot as we're moving forward, is these current year estimates kind of going, sales, EPS, for obvious reasons. The current year and last year kind of been, I'm not going to say forgotten, but the bar is low because of that whole, global pandemic thing we were going through. Take a look at next year. So the sales growth, very modest here, 4.68%, but the EPS, pretty nice, 15.83%. And after all, it is EPS that really moves the needle. Let's go ahead and take a look at the trend here also on our Zacks consensus estimate. So you can see current quarter numbers have been on the rise. Next quarter numbers on the rise, also for current year and for next year. So that's why it's at Zacks rank number 2 buy, because we're seeing this positive trend in the earnings. Where else does that show up? Well, in my favorite chart on earth, the price consensus and EPS surprise chart we have available here on Zacks.com. Here we see the black line corresponds to the price, which is the right y-axis. The multicolored lines represent the evolution of our Zacks consensus estimates over time, and those correspond to the left y-axis. Now, why am I bringing this up? Dave, what's with this negativity? That's right, folks. There was negativity in the past. You see stock price tracking down along with these earnings estimates coming down. So what is it that makes me think that the story has changed? Well, the estimates have changed. And here you see the estimates bottoming out in Q1, Q2 of 2020. Now they're starting to tick back to the upside. So that's great. This is a company that has made a lot of money in the past, a little bit downtrodden. Now you're seeing a turn in earnings. What I like to say about earnings is earnings take a very long time to reverse and go to the upside. Not like price that just shifts on a dime. These earnings trends take a while to develop. Now we're seeing a negative earnings trend turn into a positive earnings trend, and that could mean really good stuff for your portfolio in the future. So that's why I've got Acuity Brands as my top stock pick of the week. Shiraz, go ahead and take it away.
Thanks, David. I'm featuring the Boston Beer Company, ticker SAM. As you guys all know, SAM had an impressive run in 2020, almost doubled. More than doubled, in fact, and you typically don't associate this Tesla type and tech type performance from a staples maker. And a big reason for Sam's outperformance in 2020, which we, by the way, believe will continue in 21 and beyond. And before I give you my pitch on the stock, I should disclose that I've held on to Sam in the Zacks focus list portfolio the last few years. And as you can imagine, we're very happy with that holding. So why did Sam did so good, even as restaurants, bars, and other establishments were out of commission for this company? Is the so-called a hard seltzer category. So it's not about the Samuel Adams or Sam Adams beer brands or the beer category as a whole, but it's about a truly spiked, it's about Twisted Tea, it's about Angry Orchard. And you probably are in the same category as I am, that we have these on the to-do list to try out, but haven't done that yet. But this category, which has essentially been an off-premises category thus far, has literally been on fire, and Sam is a leader in that category. The stock is a little over 900 now. My sense is that over the next few years, the hard seltzer category reaches almost a third of the total beer market. The category finds a place in the restaurants, in bars post-pandemic, and the growth momentum that this category and then the revival of the core beer category in the post-COVID period is the primary reason why I believe Sam still has room to go after the impressive run it had last year. So as I was mentioning, the stock more than doubled, but it hasn't really done a whole lot since July when it reported Q2 results. In fact, it was down a bit on the Q3 report. The worry in the market has been that that competitive pressures come in, that there is more competition in the seltzer category, and that Sam loses ground. Some of these are reasonable fears. Those risks definitely cannot be completely discounted. But the company's first mover advantage and the leadership position in the space should give us confidence that as the category grows, it continues to enjoy a big slice of that market. Operationally, the company remains in excellent shape and has a number of initiatives in the work that should continue expanding margins. And with all of those expectations on the table, and as I mentioned, we hold it in the focus list portfolio. I expect the stock to be north of 1350 over the next 2 years. It's currently a little over 900. So I expect some strong momentum from Sam in 2021 and beyond.